Before we jump in today's video, I just want to remind everybody that I'm not a financial advisor. So this video is for educational and entertainment purposes only and should not be taken as financial, investment, or trading advice. All investments involve risk, and you should do your own research or consult with a licensed financial professional before making any investment decisions. Just remember, past performance is not indicative of future results.
Hey everyone, it's Paul here on my channel, Better Call Paul, and today I'm going to do an update for my real life case study portfolio for the month of April. Today is April 6th, and the Canadian stock market is open, but the American one is closed for Easter Monday. But these ETFs are all listed on the Canadian stock market. But if you're from the States, please don't close the video now, because this case study is relevant to anybody interested in living off of their passive income investments. So we're going to jump into the first spreadsheet and take a look and see what changes I've made to this portfolio, and I'll let you know why. Okay, so the first thing we're taking a look at here was on March 24th, I sold my entire TSLY position of 475 shares. Now, this was not from Yield Max. This is Harvest at TSLY. Sold my shares for $7.19, which was just a little above my average cost, for a total of $34.05. And the reason why I sold these shares, the one reason was because I'm holding YTSL from Purpose as well, and both of them have the same underlying stock, which is Tesla. But also because Tesla is in HHIS, and as you all know, HHIS is my largest holding in this portfolio. So what did I buy? I decided to move some of the money into CNYE, which holds Coinbase. And sorry guys, there's a bit of construction going on downstairs. I don't know if you can hear that or not, but I got a bathroom rental going on. Anyways, so I bought 400 shares. This doubled my position. And the reason why I did that was because I was selling this ETF between $14 and $18 a share. My average cost was just over 11. So I was realizing some gains, and I was moving the money into Tesla at the time. So now that it's dropped down to $5.73, this is a perfect time for me to double my position and lower my average cost. But I also wanted to buy a more stable foundational ETF. So I decided to add another 100 shares to HHIC. So current price that I bought it at was $14.14. Okay, so here we are in our in my main portfolio tracker for this tax-free savings account. And you can see now January, February, and March are all locked in. These are the 3 monthly balances. And you can see it has been going down. Now, this is, in my opinion, this is not because these are bad ETFs. It's just a reflection of what's been going on in the market recently. So today is April 6th. And at the time of filming this video, it was up a little bit to $38,964. So my average for 2026 so far is $41,059. Now, I would love to see the market eventually recover and this balance go back up above $50,000. All right, you can see my monthly distributions for January, February, and March, and now April. So far in April, I've received $957, and I'll show you which funds have paid me already. I haven't withdrawn any money yet, and this is relevant to the question that I was asked by a viewer. I'm currently sitting on $1,012 in cash that I can withdraw or reinvest. So total so far for this year is $4,847 in distributions I've received, and I've withdrawn a total of $3,000 so far. Okay, here you can see that HHIS is my largest position with 2,000 shares, and I have received already $540 from HHIS. Now, Biggie will pay on April the 8th. So I'll receive half of this amount because it pays twice a month. So I should get $103 on April the 8th. MSTE, I received $157.50. Alti, I received, I think it was about $24, but this will pay 3 more times. So this is just an estimate as to how much it's going to pay me. CNYE, now that I doubled my position, I went from $100 to $200 a month. And Tesla, I will receive nothing because I sold out of my position. HHIC, I did receive $36. So hoping by the end of the month, I will have received about $12.50. But so far, not that much yet because I still have, 5 more payments coming. I have been keeping track of my Alti distributions. So far, it's paid me $2,734, which it's paid me back 45% of the book cost. Now I'm toying with the idea of selling Alti and moving the money into MSTE, but we'll talk about that another day. All right, so let's take a look and see the question that Slave King asked me. So he said, "I'm curious, Paul, considering the market is down, if you can, would it not make sense to use all your distributions to reinvest and pay yourself again once the market rebounds so you can take advantage of the discount pricing?" And this is something that I've been thinking about for a few months now because with my portfolio being as low as it is right now, would it not be better for me to reinvest all of the distributions instead of pulling out $1,000? Now, my dilemma is that this case study was set up to show all of you that this portfolio will sustain itself while withdrawing $1,000 a month. But I guess in my mind, what I'm comparing this to is if you had, say, a growth portfolio where you were selling shares to live off of the portfolio. And, if you had maybe $1 million portfolio and there was a market crash and it dropped by 30%, would you actually sell shares to live off of? Or would you have some kind of a cash wedge, maybe some GICs or a high interest savings account that you could use during such a time? So I do have enough money to pay my bills for the month of April. I don't need to take out that $1,000. If I take out the $1,000, I'll basically just be growing my checking account, building a little bit more of a cushion for future months. So I'm wondering, just like Slave King, would it be better for me to just reinvest all of my distributions this month? And maybe next month or the month after, I could pull out $1,000 plus 250 over, say, 4 months, and then that way, over the course of the year, I will still withdraw a total of $12,000 from this portfolio, just putting off some of the withdrawals until later on in the year. So that's something I'm considering doing. Right now, I could buy Biggie while it's really cheap. I could buy more HHIS while it's really cheap. I could add to my CNYE position. Now, I could buy more HHIC, and I feel like that would be the safest thing to do. But right now, it's not down, right? HHIC is up right now because the Canadian market has done very well, right? While the tech market has sold off and the crypto market has sold off, the Canadian market is doing great. So I don't know if holding back $1,000 from my withdrawals and reinvesting it, I don't know if putting it into HHIC is taking advantage of the discount. Yeah, I'm curious to see what would you guys think if I, for 1 month, reinvested all of the distributions as opposed to withdrawing $1,000. Does that kind of like compromise the integrity of this case study? Right? Will it hurt the case study? Because I don't want to do that. But I also want to do what a prudent investor would consider doing under these circumstances. I'm hoping that I'm explaining myself well, that makes sense. So I could withdraw the $1,000, not a problem. The money's there. It will leave me with a couple $100 to reinvest, or I could take that $1,000 and put it into something like Biggie, HHIS, CNYE. One of the positions I currently hold. Anyway, so let me know your thoughts. Let me know down in the comments what you think I should do, and I think I'll take a look and see what the responses are like, and then I'll make a decision in the next, I guess, week or so, and then I'll let you know in the next update what I decided to do. So, anyways, guys, thanks so much for following along with this case study. We're getting awfully close to 1 year. I came up with this idea back in May of 2025. I made my first $1,000 withdrawal in June. So I'm pretty excited to hit that 1 year milestone, and then just to keep this case study rolling. And I'm pretty excited to see what happens when the market recovers, because we've seen, well, what happened last year in September, October, when the stock market was really hot, when tech stocks were hot and crypto was hot. My portfolio shot up to $63,000, and now you can see it's done the opposite, right? As Bitcoin has dropped, MSTR dropped, and and the tech sector has sold off. So, anyways, guys, thanks again for watching. And I will put out 1 or 2 more videos tomorrow. So I hope everybody has a great day. And until then, bye for now.